Most people assume that when precious metals move sharply, the explanation is simple. Maybe the dollar moved. Maybe the Federal Reserve said something. Maybe traders got nervous. But every now and then, the market sends a signal that deserves a much closer look. And that's exactly what happened when silver suddenly surged more than 5% overnight. At first glance, it looked like just another volatile trading session. Silver has always been known for dramatic swings, but beneath the headlines, something much more interesting may be unfolding. Because silver occupies a unique position in the global economy, it is simultaneously a monetary metal, an industrial metal, and increasingly a strategic resource. It is essential for solar panels, artificial intelligence infrastructure, military systems, electric vehicles, semiconductors, and thousands of products modern civilization depends upon every day. And when a market this important moves 5% in a matter of hours, serious investors ask a different question. Not what happened, but why. Because few people understand the chain reaction that can unfold when geopolitical tensions, industrial demand, supply shortages, inflation expectations, and currency concerns begin interacting at the same time. Here's what's really happening behind the headlines. Most investors are looking in the wrong place. They're watching stock indexes, they're watching interest rates, but the signals coming from commodities, energy markets, and precious metals often tell a much deeper story about the global economy. And in today's video, we're going to connect those dots. We'll explore why silver suddenly exploded higher, why the supply side remains increasingly constrained, how technological demand is changing the entire equation, what history teaches us about periods like this, why institutions and governments are paying closer attention, and finally, what ordinary people should understand about wealth preservation in a world of growing uncertainty. Because markets move fast, but structural trends move much slower, and those trends often matter far more than the headlines. Here's what most people don't realize. A 5.5% overnight move isn't just about speculation. Markets react to changing expectations. And recently, silver has been caught between two powerful forces. On one side are concerns over inflation, geopolitical tensions, and weakening confidence in fiat currencies. On the other side are expectations surrounding interest rates, economic growth, and the strength of the dollar. Recent price action has been extremely volatile, with silver experiencing massive swings throughout 2026. Analysts have pointed to persistent supply deficits, geopolitical risks, and changing expectations surrounding monetary policy as major drivers. Reports continue to highlight that the silver market remains in a structural deficit for the sixth consecutive year. FX leaders. Think of the global economy like a machine. Interest rates are one gear. Currencies are another. Energy prices are another. And silver sits at the intersection of all of them. When one gear shifts, the entire system responds. Mainstream headlines often focus on a single explanation, but markets are rarely that simple. A sudden move higher may reflect changing inflation expectations, concerns about geopolitical instability, or renewed confidence in physical demand. Let me explain this with a simple analogy. Imagine silver as a bridge connecting two worlds. One side is investment demand. The other side is industrial demand. Pressure from either side can move the entire structure. And right now, both sides are becoming increasingly important. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly because the deeper story is just beginning. The supply side of silver is where things become particularly interesting. Most people imagine silver mines operating like oil wells. If prices rise, production rises. But silver doesn't work that way. Roughly 70% of global silver production comes as a byproduct of mining other metals such as copper, zinc, and lead. That means silver output cannot simply be turned on like a faucet. FX leaders. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's the challenge facing the silver market. Major producers like Mexico and Peru continue to dominate global mine supply. China, Russia, Australia, and Chile also play critical roles. But many mining companies face declining ore grades. Energy costs remain elevated. Permitting new projects has become more difficult. Environmental regulations are increasing. Labor shortages affect operations. Political instability creates uncertainty. And building a new mine can require more than a decade. Meanwhile, global supply growth remains limited. Even though total production has improved somewhat, structural deficits persist because demand continues to outpace supply. Analysts estimate another deficit year in 2026. FX leaders. Mining is ultimately an energy business. Diesel fuel, electricity, steel, transportation, everything becomes more expensive when energy costs rise, which means producing each ounce of silver becomes increasingly challenging. This is why supply shortages don't appear overnight. They build slowly, almost invisibly, until one day the market notices, and by then prices have often already begun adjusting. But supply is only half the story. Demand may be changing even faster. Silver isn't just a precious metal, it's an industrial metal disguised as money. And that's what makes this market so fascinating. Solar panels consume enormous amounts of silver. Electric vehicles require silver. Artificial intelligence data centers require silver. Semiconductors require silver. Medical devices use silver. Military technologies depend on silver. Electronics are filled with silver. Green energy infrastructure relies on silver. Few metals possess silver's unique combination of conductivity, reflectivity, and antimicrobial properties. There are substitutes for many commodities, but replacing silver is far more difficult. Demand from advanced technologies continues to support the market, even as manufacturers attempt to reduce silver content to control costs. Structural demand remains strong across multiple sectors. Capital.com. And artificial intelligence may become an underestimated driver. AI infrastructure means more servers, more chips, more power grids, more data centers, more cooling systems, all of which require metals. Technology isn't replacing commodities, technology is consuming commodities. That's one of the biggest misconceptions of the digital age. The digital world still depends on physical resources. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert, because understanding these connections may become increasingly important in the years ahead. History rarely repeats perfectly, but it often rhymes. During the inflationary 1970s, precious metals experienced extraordinary volatility. During the financial crisis of 2008, investors rushed toward hard assets amid uncertainty. COVID disrupted supply chains and demonstrated how fragile globalization had become. Energy shocks repeatedly exposed vulnerabilities across economies. And more recently, the silver squeeze phenomenon reminded markets how quickly physical supply concerns can influence sentiment. What do these periods have in common? Confidence. Markets function smoothly when confidence is abundant. But when confidence weakens, investors begin seeking assets that have survived previous cycles. Gold, silver, energy, real assets. History shows that uncertainty changes behavior. People become less focused on maximizing returns and more focused on preserving purchasing power. That's an important distinction, because wealth preservation and speculation are two entirely different mindsets. And throughout history, periods of monetary instability, inflation, and geopolitical tension have repeatedly increased interest in tangible assets. Not because people know the future, but because uncertainty itself becomes valuable information. Which brings us to the smart money. Why are institutions paying attention? Why are family offices discussing commodities again? Why are nations seeking alternatives to excessive dependence on the dollar? Central banks around the world have accumulated gold at historically strong levels in recent years. BRICS nations continue discussing trade mechanisms outside traditional frameworks. Government debt continues climbing. Budget deficits remain enormous. And concerns about currency debasement have not disappeared. Organizations including the IMF, World Bank, and U.S. Treasury continue monitoring rising debt burdens and fiscal challenges. These trends matter because confidence in paper assets ultimately depends on confidence in governments and currencies. When debt expands faster than productivity, questions eventually emerge. Not immediately, but gradually. And smart money tends to focus on probabilities rather than predictions. That's why institutions diversify. They understand that concentration creates vulnerability, and silver's unique combination of monetary characteristics and industrial demand makes it increasingly difficult to ignore. If you're finding value in these deeper macro insights, Consider subscribing because we cover the stories mainstream media often overlooks. So, what does all this mean for ordinary people? No one can predict the future with certainty. No analyst, no economist, no central banker. But understanding the forces at work allows people to prepare rather than react. Because this isn't really about silver. It's about purchasing power. It's about inflation. It's about protecting savings. It's about retirement. It's about understanding risk. Diversification matters. Long-term thinking matters. Patience matters. Risk management matters. History teaches that cycles always exist. Booms and busts. Inflation and deflation. Confidence and fear. And people who focus exclusively on short-term headlines often miss the larger trends unfolding beneath the surface. That doesn't mean anyone should make emotional decisions. It means education matters, understanding matters, preparation matters, because uncertainty itself is not unusual. It is part of economic history, and those who remain informed often respond more effectively when conditions change. As we step back and look at the bigger picture, the overnight 5.5% jump in silver becomes more than just a headline. It becomes a reminder that markets are complex, that supply and demand matter, that geopolitics matters, that technology matters, that debt and currencies matter, and perhaps most importantly, that trends developing quietly beneath the surface often become tomorrow's headlines. We've explored why recent price movements deserve attention. We've looked at the growing challenges facing mine supply. We've examined rising industrial demand driven by energy transition, artificial intelligence, and advanced manufacturing. We've revisited history and the lessons it continues to offer. And we've discussed why institutions and governments are watching these developments closely. Markets move in cycles, headlines come and go, but the laws of supply and demand never disappear. Pay attention to the trends most people ignore, because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.